Hey, what is up, guys? Casey here with Lions Den Investments and Reviews. Hope you're having a good day. It's been a minute before I was out here shooting a video. I think my last video was about 2 weeks ago. So it's been a minute, but here's the reason why I haven't been shooting videos, guys. To be quite honest, this market right now is just, one minute it's up, the next minute it's down. Bitcoin's really not doing a whole lot. The market as a whole really isn't doing a whole lot. You got a bunch of news out there over the past 2 weeks coming out on, like regulations, the Biden executive order. You got the Ukraine and Russia situation as well that's unfolding. So we'll cover a lot of that here in this video. Just, kind of bring you up to date on where we are and what's happened over the past 2 weeks. Um, so before we do that, though, I want to look at the technical analysis on Bitcoin, okay? Because again, a lot of people, I'm trying not to cover the prices and zoom in too much, and look at everything from underneath a magnifying glass day to day, especially when you really have a market that's not really doing a whole lot. Um, this prevents me really from repeating myself over and over and over as well, because you see a lot of people, guys, on these YouTube channels, and everybody's trying to cover a project or cover the markets day by day and look at everything under a magnifying glass. When you do that, you can steer people in the wrong direction real easily, and that's something I don't want to do over on this channel. Is have people follow me, and then I'm so focused in and looking at things underneath a magnifying glass that my emotions get the best of me, and because I'm emotional, I make the wrong decisions from an investing perspective, or I take the wrong approach with speculation, that kind of stuff. And I don't want to do that to anybody. So that's why you're not seeing me shoot as many videos. Okay. Now that might change here when the market picks back up, or as I get into some of my passive income investments that I'm looking at, and tracking some of the transactions and the earning of income from those passive income investments. I'll start shooting more videos and going into some of the projects that I'm involved with again. But for the time being here, you're probably gonna just expect maybe one video a week from me right now, because I'm a little, I'll be honest, I'm a little burnt out on this market and trying to track it every day, again, from underneath a magnifying glass. So next week, I'll try to get possibly a video out here before we head to, we're going on a trip here. My wife and I are, and we're going to be heading to Maui, Hawaii. So we leave on Thursday for that. So I'll get a video out before that happens. But okay, anyways, getting back to Bitcoin, okay? Looking at the charts, I got right here we bottomed out, okay, on the charts with Bitcoin. We bottomed out down there at about 34,000, 33,000. We came back up and we got rejected, as I thought we would, right here at about 45,000, okay? So you can count this literally as your new higher high, okay, because this is the old one back here. We actually broke that. We didn't break 46,000. 46,000 is what we would have had to break to continue, this upward movement here on the price. We got rejected though at about 45,700. Came back down, and as you can see here, I've got some support right there at about 38,600. So if we can hold here, guys, you would essentially have a new higher low. Okay, and then what you could expect is something that would look like this in price action, where we come down, we'll break this 46,000 on the next move up, okay, and get rejected probably up here around like 50,000, come back down and support, something like that, okay. So it's kind of what I'm expecting on Bitcoin right now. Um, Again, only time will tell to see if this actually happens, because if you look at here next week, we've got Biden, who's expected to issue an executive order on crypto and CBDCs. Um, Now, both President Barack Obama and the previous administration issued executive orders related to digital assets as well, okay? But basically, what they're saying here, In a Thursday report from Yahoo Finance, um, an official here, Jennifer Schonberger, okay, who's familiar with the matter within the Biden administration, revealed the executive order could arrive as soon as next week. The directive from the President Biden would reportedly order the Office of the Attorney General, the State Department, and the Treasury Department to study the potential rollout of a U.S. issued central banking digital currency. Okay. In addition, the director of the Office of Science and Technology Policy, the newly appointed Alondra Nelson, would provide an evaluation of the infrastructure needed for the U.S. to support digital dollar. The agency will reportedly plan to issue a report to the U.S. President and distributed ledger technology within 180 days, with an update expected on its environmental impact in 545 days. So, you've got a lot of oversight for financial stability from the council here, and they're going to study, again, the financial stability issues resulting from the introduction of cryptocurrencies. The Securities and Exchange Commission's Commodity Futures Trading Commission, Federal Reserve, Federal Deposit Insurance Corporation, and Office of the Comptroller of the Currency will consider measures to protect the markets and report to the President on methods to mitigate risks with respect to crypto. So, there's been a lot of talk out there, guys, in regards to, whether or not this executive order would be a direct attack on cryptos and they would outlaw cryptos altogether. I've heard people talk about that. And here's the thing, okay? I don't think they would ever go about doing something like that, to be quite honest with you, because if they were to outlaw crypto, you would have a revolution pretty much overnight, okay? You can't keep stifling innovation with developers and people that have been in this space for 6 or 7 years by, completely outlawing cryptos altogether. That's just, to me, they'd be shooting themselves in the foot, especially if they're using stuff like Ethereum. Um, the SEC has given Ethereum a free pass if you follow the XRP case, okay? Um, and if they outlawed all this stuff, being that Ethereum they gave a free pass to, which gave birth to the entire market as a whole, basically when it comes to alternative projects, DeFi, that kind of stuff. If you outlawed all that, they would basically be just shooting themselves in the foot. Okay. Um, Now that's not to say they can't do that. I mean they realistically probably could, but then again, I mean the chances of that happening are very, very slim. So I just want to make that clear to you guys that that's what was in the report here, and for the executive order that he was planning on issuing here, potentially next week. Okay, it may not be next week, maybe a little bit later on down the road. But if we go over here to the next article, Gary Gensler, okay, he's saying the SEC is working with crypto exchanges to adjust rule sets and promote investor protection. So again, he's involved with this as well when it comes to the executive order. And if we can get clarity, okay, if we can get more clarity um, on just what some of these assets are from these guys, um, it's definitely going to help. I embrace regulations and clarity because here's the problem that people are having right now. Understanding is that if you go out and you look at somebody like Kevin O'Leary, right, from Shark Tank, you'll see just recently in his one of his interviews, they were talking about. They asked him the question about when he thought Bitcoin would hit like 100,000, 200,000, 300,000, like we were expecting to happen this last bull cycle. Well, his response was that's not going to happen until the big institutions like Goldman Sachs, J.P. Morgan, um, those kind of institutions start actually buying Bitcoin. Okay, and that hasn't happened yet. And he's talking about going out to an exchange and actually buying the actual crypto. See, the thing that they've been doing so far is they created the ETF futures market, okay, back in 2021, and that allowed them to go ahead and start buying Bitcoin, but they're not buying it, they're not buying the physically backed asset, okay? And I covered that in videos months ago back this summer. um, clarifying that for people. So just because you got these big institutions buying into Bitcoin, they're not buying the actual crypto. They're buying the futures based ETFs, and that's controlling the price and manipulating it, suppressing it. And I think that's one of the reasons why you didn't see Bitcoin, break 70,000 back in November and keep going. And that was back in November of 2021. I don't think that's why you didn't see that. Okay, and again, if you look at the prices now, where we are now, and the price movements on Bitcoin, I think that's uh, plays a big role in why it just doesn't make any sense when you look at like wealth cycles on Bitcoin and the structure of those wealth cycles in the past compared to this one, completely different. Okay, and again, I think that's because of the futures ETFs that were created. Now, if you take geopolitical events into play here, and this is purely speculative at this point as to like what Bitcoin's going to do based on you know a potential invasion of Ukraine with Russia, right? So if Russia invades Ukraine, what is Bitcoin going to do? That's a big question right there. I can tell you this though, if stocks and everything, as far as asset classes goes down in value, Bitcoin will go down with it, along with the crypto market. I'm pretty sure of that. But at some point, I think you'll see something similar to what we witnessed in 2020 when we went into lockdown and the pandemic stuff, right? You got Bitcoin that dropped down to like $3,000 at one point, and then it turned around, just ripped and roared all through 20, later half 2020 into 2021, giving us new all-time highs. So I think probably what you would see is something similar to that, where Bitcoin comes back down. And right now, that Bitcoin's at $39,223. Um, I don't see. Oh, honestly, I do not see. Let me get rid of this real quick. Sorry, guys. I do not see Bitcoin actually. If it does drop here due to an invasion from Russia, I don't see Bitcoin going down below like 29,000. Because we go down lower than that, again, I mean, who knows what it would do, but you come down to about 19,800. I just don't see that happening. Okay, I think we might retest a 29,000 if Russia invades Ukraine, and then you're going to see something similar to what happened back in March time frame when we went into lockdowns and all that stuff. So last thing I want to cover here, guys, and then I'll end the video because I know it's getting kind of long here. But this is interesting news, and I've been, doing, being that taxes are due here in April. I've got to finish up my taxes, and I know a lot of other people are going through those as well. But here's an interesting news article on the U.S. tax reporting for cryptos, and this is, basically the U.S. Treasury affirms what I'm going to tell you here, which is crypto miners are exempt from IRS reporting rules. So the U.S. Treasury affirmed that the crypto miners and wallet operators are exempt from the IRS reporting rules, preparing appropriate regulations. Okay, I'm not going to go into this article too much here or go into detail. I'll leave a link in the description so you can check it out. But basically, the gist of it here, guys, for like stakers, for instance, I've been staking a lot with proof of stake tokens. And one thing I like to do, or was doing when I was reporting my taxes, is I was reporting every single time a crypto was rewarded to me and at what price. Well, if you go in and you look at articles from like the case from the couple in Tennessee, okay, that took the IRS to court over a refund. Basically, um, there are no laws around staking. I mean, even though the IRS will come out and say they've got their own statutes for it or whatever, there are no laws around that. Um, the IRS will say they've got policies and this and that around it, but if you take it to a court case, you're going to win because that's exactly what happened with these couple that took the IRS to court. Okay, and it was over a refund. So the IRS was basically um, supposed to give them a refund, and the whole thing started over the fact that they were talking about staking and filing taxes on cryptos that were received as rewards during the price of, like so that you have to report the crypto and what the price of it was at the current time you received it. Now, if you go in and you start reading some of the laws on cryptos, right, dating back to like 2014, one thing that's interesting is that the IRS specifically states in the 2014 laws that were made around cryptos that cryptos are treated as property. And if you consider that, okay, if you look at staking, staking is like the creation of new property, because we're talking cryptos here, which by law, going back to 2014, are treated as property. So think of it as a new token being rewarded to you is creation of property. Now here's where it gets interesting, because if you take anything else out there that's creation of property, say an author creates a new book, right? The author's not taxed on creating that book. He's only taxed when he takes that book and he goes to the market and sells it. So that's where things get really interesting with the IRS trying to get people on, you know, getting all their transactions together for specific times they receive their tokens. Okay? You don't have to do that, by the way. All you have to do is just file on your taxes. Like, let's say you have 10 Ethereum, right? And you stake 10 Ethereum, you stake it on this date. Here's the price with the timestamp of what Ethereum was going for per one token. So that sort of thing, you would file that information on staked, and then let's say at the end of the year, you end up, instead of having 10 Ethereum, you've got like 20 Ethereum, right? Or 15. Now, that's considered newly created property. So if you turn around and you sell it, okay, if you sell it for US dollars, now you're looking at capital gains, and those 5 new Ethereum that were created, or those new 10 Ethereum that are created, are going to be considered income as well. So that sets your tax bracket on the income from those 10 Ethereum at whatever the current price is, when you go to unstake and possibly liquidate to US dollars. So that's technically all you need to do when it comes to staking. And the crypto miners are exempt from IRS reporting here, as they're saying. And this includes staking as well. So you can go in here and read this article. But, this is great news, guys. Great news, because reporting taxes on cryptos is hard enough right now, knowing that we don't have a whole lot of clarity on that. So when we get more clarity, it's going to make this whole process a lot easier as well. And I'm really looking forward to that here over the next, couple years. So the rest of 2022 going into 2023 and in 2024, I think you are going to get that clarity that we need. Kind of like what Kevin O'Leary was saying in regards to regulations. So anyways, that's really all I have for today's video, guys. I'm going to end it with that. If you like the content, hit the subscribe button, hit the like button as well. It helps the YouTube algorithms. And with that said, guys, again, these markets are volatile. They go up and down. But as usual, like I always say, fear nothing, my friends. I'll talk to you later.